Hello. Today I'm going to discuss in a little bit more further details the new requirements of Fannie and Freddie for self-employed borrowers for applications dated on or after June 11. These new requirements are temporary, we hope, but these requirements have been put in place so that we can analyze the current stability of the borrower's self-employed business, to analyze their income and also the stability of continuing income for that particular business. What has Fannie Mae required that we obtain? In addition to whatever information we're obtaining for to analyze the actual income that we're using for qualification, Fannie and Freddie want to determine that the business has not been impacted by our current situation with COVID-19. They've given us several options in order to complete this review. One of the options is an audited profit and loss. Audited profit and loss are very time consuming and are normally very expensive. So we have not received any of those. But if we were to receive an audited financial statement, it must be prepared by a CPA, and an audited financial statement actually has a statement from the CPA stating that not only have they obtained this information from the borrower concerning the borrower's self-employed activity, both income and expenses, but they've also reviewed the documentation to support this. If the accountant, the CPA, does not write that statement, it's not an audited financial statement, and therefore that's not an option that we can use. The most common option that we're seeing, because again, the ability of an audited financial statement is very difficult to obtain, is Fannie Mae's allowing that we get a profit and loss and balance sheet that can be completed by an accountant or the borrower themselves. That profit and loss must be signed by the borrower. What are we looking for in these profit and loss and balance sheets? We're looking at the income and the expenses that are reported in this profit and loss are in line with the income and expenses that we have from previous years. Okay. If there are substantial differences, they will have to be addressed. Okay. But in addition to the profit and loss, we need to provide the most recent 2 months bank statements to support the income being reported on this profit and loss. Okay. What we're looking for when we see these bank statements, the bank statements can be either business or personal. If the personal bank statement is what the borrower uses for his self-employed income. Personal bank statements are normally given to us when the borrower is a Schedule C and does not have a business account. Okay, so what are we looking for? Okay, what we need to know is that the deposits being made into these accounts, in these bank accounts, support the gross income that's being reported on the P&L provided to us. The P&L should be up to the month preceding the closing. For example, if you're closing in August, then your P&L should be up to July 31st. Okay, what we do, you take the gross income on this P&L. For example, let's say the gross income is $350,000. You divide that by 7. That means that your monthly average income, deposits should be around $50,000 because that's what your average monthly gross income for that business is. So you take your 2 months bank statements that were provided and you analyze the deposits. What are the deposits? What deposits can we count? Well, we should only be counting deposits that are generated by business activity. What does this mean? You cannot count SBA loans. You cannot count PPP loans in these deposits. You cannot count transfers from the personal account or transfers from a savings account. You should only be counting deposits that are new and generated from business activity. So you take the deposits in both previous 2 months statement. Back to our example, let's say we have June and July. We would take the deposits reported in those statements in June and July, and we would divide that by 2. Okay, let's say the deposits are $40,000 in 1 month and $60,000 in the other month. So that's a total of 100. You divide it by 2 and you have 50. So that means that your deposits are in line if the average of your deposits are in line with the average of your monthly income that you calculated. What else are we looking for? Okay, when we analyze the business, we want to make sure that the borrower has liquidity. What does this mean? The borrower should not have a negative balance at the end of his bank statements. If he does, then we would need to analyze and question that. Okay. When we look at the profit and loss, we're going to determine if the income on the profit and loss has decreased. How do we do that? The same way we do the income analyzation when we do the income that we use to qualify. We take the net of the income. Okay. So if the net of the business is in line with the income that we're using to qualify, then we don't need to do anything further. But if the net has decreased, then that means that we have to use the lower of the two. We have to use the net that's being reported on the profit and loss issued to us. That is the income that we now have to use. But in addition to using the lower income, we also have to provide additional documentation as to, yes, this borrower's income has declined. The decline was due to maybe a closure or some additional expenses that they had to incur because of COVID. But since then, they have remedied these situations, and the income is not expected to continue to decrease. Now, if the income on the profit and loss is not supported, the gross income on the profit and loss is not supported by the bank statements provided, the two most recent, then we have to look into it a little further. And we may have to request additional bank statements to document that, okay, maybe June and July was not the strongest month. But if we go back to, let's say, January to May, the deposits, if we add them and we average them now by 7, which is the total number of bank statements that we would have, then the deposits are in line with the income that we're using from the profit and loss, the income that's being reported on the profit and loss. Okay. Bottom line is the information provided on the profit and loss has to be supported by the documentation provided of the business. In this case is the bank statements. If the profit and loss net income has decreased, we have to use a lower amount, and we have to justify why we feel that this business is not going to continue to be impacted by COVID-19 or whatever may have taken place this year in this business activity. So we have provided some additional worksheets that may be used to do these calculations that we've received from some of our other MI companies that have provided some examples. This is a new guideline, so we expect to have questions and have additional concerns about it. So we urge you to contact us, anybody in the underwriting department. You may contact us via email, and we'll be happy to answer you and work with you through this to make sure that this is not something that it's caught at last minute. This is something that we can do in the initial review to make sure that this is not going to be a problem to close your file in time. So if you have any additional questions in reference to this, I urge you to contact the underwriting department, and we will reach out back to you and help you as much as we can. Thank you.